AMC stock today is down, but certainly not out, ladies and gentlemen. Things are still overall bullish, and I kind of want to get into that here with you guys because this is the first big red day that we have seen in a while, although this day back here on May 2nd was a negative 2.6% down day. At one point, you were down like 6.5%. AMC did recover. So I do want to point that out as a possibility for today. Obviously, markets have been open like an hour and a half. So we're pretty early in the overall trading day. But there is huge things that are happening today and after hours and tomorrow morning that you really need to watch as soon as possible. This has big implications for our markets. Has Goldman Sachs going as far as to say you should go out and buy some puts to protect your portfolio? This comes from Goldman Sachs, which has a 35% chance of a recession in 2023. That's the lowest estimate on Wall Street, at least from major institutions, where most firms and most banks are forecasting a recession. Goldman Sachs is not, and they're the ones telling you to buy puts. Yeah, you guys need to watch this information as soon as possible. Let's get into all of this and much more. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. So that's what we're going to jump into first, is kind of what's going on in the marketplace today, what's going to be happening in after hours, and what we can expect for tomorrow, or at least what's going to be happening tomorrow. So first things first, what happened last night right after the market bell, right after you closed, was Janet Yellen came out on CNBC and talked for like 20 minutes, saying it would be a catastrophe if the government did not raise the debt ceiling, that you would almost instantly go into a recession. And she was asked, like, does she think the debt ceiling is going to be raised? Is she concerned? She sounded concerned, and that's what the anchor said. Like, hey, why do you sound so concerned right now? And she basically confirmed just that we're not close to getting the debt ceiling raised, and there's very little the Treasury would be able to do after June 1st. So that is what is giving the markets a little bit of anxiety today. And coincidentally enough, Biden and House Speaker Kevin McCarthy are meeting today at 4 p.m. Quote, both sides have cautioned that the meeting is simply a chance to have a conversation, with definitive progress on raising the debt limit unlikely. Biden and McCarthy remain at odds over the House Speaker's caveat that a deal on raising the debt ceiling be tied to spending cuts. Biden remains raising the debt ceiling is non-negotiable. That just reads really weird. Apologies there. And like it says right here, Treasury Secretary Janet Yellen says not raising the debt ceiling would be, quote, an economic catastrophe, and regulators are not close to any policies that would limit short-selling regional bank stocks. So she also did say a couple other things, but that was really what it was for, was the debt ceiling. Now, this quote, this is the big part that I think is very important in regards to the stock market. Quote, Wall Street is hesitant to take on any major positions until we find out the outcome to both debt ceiling talks at the White House and on whether or not inflation is proving to be very sticky, said Ed Moya, senior market analyst at Oanda. Quote, no one is doubting that the bank stress won't be going away as lending conditions continue to tighten. Reserve requirements will go up, which will lead to less loans and a weaker economy. And it says right here from Evercore ISI says a deal to raise the debt ceiling isn't likely to be brokered out of the meeting between U.S. House Speaker Kevin McCarthy and President Joe Biden slated for Tuesday afternoon, according to Evercore ISI. Analyst Tobin Marcus said that because both sides have yet to show signs of yielding on their respective positions, raising the debt limit may only come as the so-called X date gets closer. The worst case for markets, and unfortunately perhaps the most likely outcome, is that we will see no real movement at all, Marcus said. Democrats are still digging in, even as it looks increasingly unrealistic to us that Republicans will fold and accept a clean increase. In this case, the staring match will continue until we get closer to the brink with no one blinking yet. So that's the problem here. It's not the actual default. America has never defaulted on its debt, but the closer we get to getting a default, the higher chance we have of seeing a downgrade for the markets, right? For the US economy. Now, let me show you what happened in 2011, specifically on the day where we got downgraded by the S&P Global. It was on May 5th, right after markets closed for trading. It's on May 5th. So the reaction, or August 5th. August. It was on August 5th. So it was right after the bell, right? So what happened the day after when markets really got to react to this? Well, the S&P 500 was down 6.51% the following day. That's one day. You haven't had a 6% down day since 2020. And markets actually get halted at 7%. And then they get halted at 10%. Then they get halted, or 12%. Then they get halted at 20% for the whole entire day. So back here in 2011, on August 8th, this obviously happened on a Friday after the bell. And then coming on Monday, all hell broke loose on Monday. So it's not necessarily just defaulting on the debt, it's getting close to the default, which gives you, downside in the market. So there is that. I wanted to share that with you guys because if we get good news out of these talks, markets are going to love it. If we don't get any more progress, if things sound even more divided after this meeting, that's a very negative thing, right? So be on the lookout for that. As well as that, obviously, inflation does come out tomorrow, and mix these two catalysts together. And if it's all bad, you could see a pretty sizable down move. And that is likely why JP Morgan is telling you to literally buy puts on your portfolio, even though they don't expect an economic decline in the way that most other banks do. I think when the bear, or when the bull, right, starts to tell you, hey, you should buy some puts, kind of when you want to pay a little bit more attention. Now, the inflation rate month over month for April, you're expecting that at 0.3%. Inflation rate year over year, expecting that at 4.9%. Core inflation rate year over year, expecting that at 5.6%. Core inflation rate month over month, expecting that at 0.3%. Any of these numbers coming in higher is going to be bad, especially the headline and the core month over month readings. This data comes in at 8:30 in the morning tomorrow. So if you guys are trading this, if you guys are, buying options or doing whatnot, you want to finalize those trades by the end of the day today, because you're going to have big data coming out tomorrow morning, as well as Biden and McCarthy. That can also be a huge catalyst for this market. Now, let's get into kind of what is going on with AMC stock here today. So you're getting a new research piece that is coming out today. I guess it's maybe not a research piece. It's labeled as a research piece. But it's more or less analysts just upgrading their forecast for AMC earnings going ahead. So it says AMC Entertainment Holdings Inc. analysts at Wedbush increased their Q1 2023 EPS estimates for AMC Entertainment in a research note issued to investors on Thursday, says May 4th. So that was actually right before, and it says Wedbush analyst A. Reese now anticipates the company will post earnings of 0.11 or 11 cents per share for the quarter, up from their prior forecast of 0.12 cents. The consensus estimate for AMC Entertainment's current full-year earnings is 40 cents a share. Wedbush also issued estimates for AMC Entertainment's Q2 2023 earnings at 4 cents of EPS, Q3 2023 earnings as 6 cents of EPS, and Q4 2023 earnings at 6 cents as well. Full year 2023 earnings at 28 cents. And I believe this is a loss because it is in parentheses here. So kind of expecting better earnings going ahead after the last earnings that we just got. And that is the only bit of news that is really coming out for AMC stock. Now, what is likely happening here is, like I mentioned, there's a lot of underlying fear that is in this market right now. Now, you're not seeing a huge reaction in the markets because nobody really knows which way this thing is going to go, and nobody wants to be the first to kind of try to predict it. And obviously, I'm talking about the debt ceiling as well as the inflation report that comes out tomorrow. So I think some of that fear is really making some hedge funds go out and short stocks such as AMC that had good earnings, not great earnings, right? Not terrible earnings, and overall has this arbitrage trade going for it. Like, it's not going to be as much correlated to the markets as, something else, right? So AMC, in theory, could fall more than the markets. That's typically what happens when the markets have crashed in 2022. AMC falls more than the markets. Not always. Sometimes AMC does outperform, and recently we've seen AMC outperform a lot more than the markets. So I don't really think this holds true necessarily the same way that it did in 2022. I think this time around, if the markets fell, AMC stock would likely hold up a lot better, but that's just the overall mentality of short. So that's why they are going out and shorting AMC in such heavy numbers today. And it looks like almost 2 million shares of AMC stock are being shorted so far on the day, bringing the total to 129.5 million shares that are estimated to currently be sold short. Live short interest of free float at 25.09%, up 1.33% on the day. Cost per hour average at 308.5%. Cost to borrow max 335, almost 336%. Cost to borrow minimum at about 47%. So very high. Again, these numbers, I mean, it almost makes me laugh because, dude, shorts cannot catch a break. And obviously I don't want them to catch a break, but it's just like, geez, it's not relenting at all. They're just staying over 300%. Which is kind of insane. Now, option activity for AMC has been pretty dull so far on the day. 3 orders totaling $411,000. Positive order value of 0%. Nothing compared to what we typically see as far as option activity with AMC stock. But I will tell you, for this Friday, the volume of options today is 61.39% positive, meaning the calls. 38.61% of today's option volume on this expiration is put. So you are seeing more bullish kind of volumes and inflows into options, but the institutional options have been pretty bearish today on AMC. So I think that's an interesting dynamic that is starting to happen. Now, if we take a look at the option activity with Stonko Tracker, for this Friday, you got about 16,000 calls in the money, 98,000 calls out the money. In the money puts at about 29,000, out the money puts at 109,000. So it's pretty even here. There's really not one way that is dominating here. Sometimes it's the puts, sometimes it's the calls that has more open interest for any given expiration. But not today. It's almost 50-50 exactly. So I think that just goes to show nobody really knows what is going to happen. I think AMC is being shorted again today because nobody really knows what's going to happen. People think worst case scenario, if the markets did rip from here, well, AMC is an arbitrage trade and the stocks rallied quite a bit. Risk to reward, it makes a little bit more sense shorting AMC here than some other names, right? And AMC tends to be a target for these hedge funds, and obviously I'm saying this from a hedge fund's perspective, that they think it's a better alternative to short AMC than to short the broad markets. I absolutely disagree with that. I think AMC has outperformed recently when the markets have fallen, and I think AMC will continue to outperform if the markets do fall. And we are just very back and forth today. This is the indecisiveness. Just back and forth. We don't know where to go. There's no direction in this market today, but there is some underlying fear that is definitely still here nonetheless. So there is that. Now, AMC, as far as a technical picture, this is good. This is pretty good, right? RSI has reset to a neutral level after today's little fall that we're seeing at 54.5. Neutral is 50. You were at about 65 before, so you were kind of at that overbought level. You're back reset now. If we can retrace some of these losses by the end of the day today, that's going to be a very positive thing. Now, the key level that I want to watch into the close today is $5.50 per share as a psychological level. And granted, we were, if we go ahead and pull up the 1 minute candlestick chart, we basically hit that today. $5.53 per share just a minute ago, and we are starting to bounce a little bit from there. But if you hold $5.50 throughout the rest of the day, that is a very positive sign. Worst case scenario, you come down, retest that 50 and 100-day moving averages at about $5.22 per share, and I would be shocked if you didn't find support at that level. My base case scenario still is for an upside move in AMC stock. $6 per share is a really tough level for hedge funds. They are literally terrified of that level. Every time you get up there, they do whatever they can to beat the stock down. We're talking on Friday of last week, struggled around $6 per share, got beaten down towards the end of the day. Same thing yesterday, right? Came up $6 per share. You were trying so hard for a majority of the day to break out and run past $6, got beaten down and sold off kind of towards the end of the day. And today it's same thing. Pre-market AMC stock popped and hit a high of $6.02 per share. As soon as you open for the cash open today at 9:30 a.m., you started getting rejected instantly. So I think it's no surprise here. They are terrified of $6 per share. We went over the history as well. All major rallies with AMC have either started by hitting support at $6 per share or breaking above $6 per share. It's a very important level, and shorts are clearly terrified of that level. Nonetheless, guys, that is going to do it for this video. Let me know what you guys think about this information down below in the comment section. What do you guys think about this debt ceiling crisis? What do you guys think about the inflation report coming out tomorrow? What are your trades? What are your positions? All of that. Put that down below in the comment section. If you guys also want to come see my trades and want to come trade with me every time I make a trade, or at least kind of get a feel of where, I'm going with some of these trades and use that as a tool in your trading strategy as well, link down below in the description of this video for that trading community. Nonetheless, thank you for watching, and I will see you in the next one.